All right. Welcome back to the How to Get Started in Passive Investing YouTube channel. And for our second episode in our three-part series entitled Partner Spotlight, the powerhouse operators behind impact equity, we're going to dive deep into the partners that make impact equity a great source for new or newer passive investors. In this episode, we'll be talking with Rob and Dasha Beardsley from Lone Star Capital. And Lone Star is one of our second world-class fully integrated operators in the lucrative multifamily syndication space. With over 350 million in acquisitions and over 30% return since 2018, Lone Star Capital is a fast-growing real estate investment firm that owns and operates over 2,500 multifamily units in Texas. And they deliver superior risk-adjusted returns through diligent sourcing and selection, vertically integrated property management, and rigorous reporting. So pay close attention to the institutional strategies that Rob and Dasha share in this great episode, and listen as they share their story about becoming one of the most dominating groups in Texas multifamily space. All right. Well, why don't we go ahead and jump right in? Rob, can you give us a little bit of your background and kind of how you arrived to where we are here today in 2023?
Yeah, absolutely. So going back to the very beginning, Josh and I are brother and sister, and we grew up in a real estate family. Our parents ran a residential brokerage firm from home in Silicon Valley, and they did some fix and flips and construction on the side, all on the single family side of things. And it wasn't until about 2017 where I got into multifamily and kind of introduced my parents to it and wanted to get the whole family involved. Unfortunately, at that time, my parents were just still busy running their main business. So I went out and met my business partner, Kent, and we formed Lone Star Capital in 2018. And since then, Lone Star Capital has grown a lot. We've acquired over 350 million in multifamily assets in Texas, our focus being workforce housing in Dallas and Houston. And as the team's grown, I've had the pleasure of bringing my sister onto the team as well, who you've had the pleasure of working with, and she's been doing a fantastic job.
Awesome. Awesome. Thank you, Rob. And Dasha, could you give us a little bit of your background, kind of what you were doing before you got the nod from Big Brother Rob to come onto the team?
Yeah, absolutely. So Rob gave a pretty decent background on what it was like kind of growing up and our mindset as a family. But I just graduated from USC and I got a degree in real estate development. So it wasn't very clear that I was going to be full-time with Lone Star until about a year and a half ago. I was doing part-time work, started out doing marketing, and then transitioned to more full-time doing investor relations and marketing.
Okay, very good. So you actually went out and got a degree from USC, obviously great school in development. So that actually adds to your tool belt quite a bit and brings a lot of knowledge and expertise that would be really valuable in this value add space that you guys are in. So I'm curious, Dasha, with your education, what type of benefit do you think that's bringing to Lone Star and to what you're doing in your current roles?
Yeah, absolutely. I think I benefited greatly from, and Rob benefited greatly from that because I didn't really have to be onboarded. I'm talking to potential hires that we're about to hire. They're asking about onboarding, and I'm thinking about my experience being onboarded at Lone Star, and it was just kind of a really natural transition, and I didn't really have to be taught anything. So I'm really thankful that I had that background and had, the opportunity to get a great education in this field, which really actually drew me to USC specifically. I knew that they had a great real estate program, so that was big part of my decision to study there. But I did get pretty interested in development specifically, so I'm pretty excited that we're looking to do that in the future, and I would love to get more involved on that side of the business as well.
Okay. Yeah, no, that's great. We'll definitely want to get into that a little bit more because I know that's going to be a bigger part of Lone Star in the coming years, and excited to kind of sit on the sidelines and see how you guys do that transition as well. So now, Dasha, your primary responsibility, my understanding, is investor relations, or at least that's been the majority of your and my interactions, and you do You do an amazing job with investor relations, and I think it probably benefited you as well. That like real estate has been a part of the family business for years and years and years and years. Then you go off and you have this great educational program. So you have a lot more expertise in this area than kind of our avatar, which is that first, maybe second or third time passive investor. So are there some common mistakes or challenges or struggles that you see first time passive investors running into when they're trying to make that first time investment with you guys?
Yeah, I mean, I would say that there aren't actually too many mistakes that are made. I think that it can be confusing as a first time investor because every operator has a different process that they go through. So, um, as much as I think first time investors do this anyways, but contacting the operator or the investor relations associate is really important because a lot of the times, like if someone is investing with an IRA and they all have their own process, just getting everyone in contact and not just running off and doing, going through the portal and doing as much as you can kind of helps me. And, being in contact honestly is really important, I would say, as a first time investor. Just so that I can kind of make sure that they are going through the process correctly. Um, so yeah.
So it's better to reach out and have you explain something they may not know anything about versus jumping in and putting a bunch of stuff in the PPM that you might have to go back and correct.
Exactly. Instead of making a
Okay.
mess that then we both have to clean up afterwards.
Got it. Got it. Okay. So you're saying 24/7, 365, reach out to Dasha. You're always eager to take the call, right? No, I'm joking.
Not so much, but I am patient and I realize that, especially for some of these first time investors, this is a huge deal for them. This is like,
Yeah.
could be the beginning of a really like life changing investing career. So I recognize that, this is a much bigger deal for them than it is me. So I really try to kind of put myself in their shoes and understand when they are reaching out to me at non-business hours.
Yeah. That's a really good point. And I think some of the really, really big players that might not have the investor relations resources that Lone Star Capital has, I think they can forget how important that first transaction, that first investment is, because a lot of folks they'll kind of dip their toe and put 50 grand or 100 grand for their first time investment, and if that goes well, it's likely they will come back. And in fact, I I believe you guys have some statistics about repeat investors. I believe, is that something you guys know off the top of your head, like how many times people come back to you um, on average?
Yeah, I would say it's a difficult statistic to know exactly because since we are growing, more recently, we haven't had the opportunity to have some of our newer investors repeat.
Yeah.
But I was looking at the other day, and I think it's around 25%.
Okay. Yeah, and that's about in line with what I'm seeing with my investors as well. And as we get more history, we see that number increase too. Which obviously, as operators or raisers, it's important for us to make sure it's a good experience because our hopes is that we could have a smaller bucket of investors that we go back to over and over and over again, so we don't have those first time experiences that we have to keep educating on the front end. So yeah, really good. Um, so I'm curious. You mentioned a database, and I know there's just a ton of resources you guys make available to your investors. Can you kind of walk through what that looks like and what you make available to your investors before even technically having to hop on the phone with you guys?
Yeah, absolutely. So we do actually, you can check it out by going to lscdd.com. And so that is our company data room where we have a bunch of resources, anywhere from testimonials, our references, track record, our company presentation, so you can kind of get a better sense of what we do, our business plans, and things like that, as well as case studies, which can be really helpful. So when I'm talking to a new investor or a potential new investor, I listen and I hear kind of what they're looking for and what is going to help them trust us more, and kind of get them to feel comfortable investing. So sometimes, I'll send over the whole data room when I feel like they really want to dive into everything. But a lot of people, there's so much information, they
Mm-hmm.
might not want to read everything, and they'll just kind of not even look at it because it's so overwhelming. So, a lot of the times I will send the whole thing, but if they're really talking about some specific deals like our exits that we've done thus far. Then I'll send over the case studies. So kind of listening in, and I have found it really helpful to have those resources really quick on hand, and definitely helps get first-time investors more comfortable, as well as experienced and sophisticated ones.
No, I can appreciate that. In fact, I remember when you and I first spoke, I think you just sent me a couple of documents at first. And I think it's important because a confused investor is not an investor that's making decisions. So I really enjoy that you guys create this data room for each of your deals, for each of the companies, because literally there's not a question that I can think of that I can't find the answer in your due diligence or data room. So that's just a fantastic resource. So so thank you, first of all, for being a fantastic investor relations person. I've actually received multiple comments from my investors about how great of a job you're doing and the resources you guys have. So hats off to you and what you're doing there. And maybe that's kind of a good transition to go back over to Rob. Part of the materials that you guys make available that a lot of different investor groups do not is like the detailed underwriting calculations and files that you share. So Rob, I know, and actually I didn't introduce you as such on the front end, but being the co-founder and principal of Lone Star Capital, two-time best-selling author of two books that are actually referenced almost daily. I see on the social things that I'm watching, definitely being mentioned in different platforms that I'm a part of quite often. So that underwriting piece, I think that was really kind of your first step on the stage in this space where you really started to make a name for yourself. So can you talk a little bit about that underwriting process and some of the unique things that you think you guys are bringing to the table with Lone Star Capital?
Yeah, absolutely. So when we first got going in the business, I set out to build my own underwriting model, which I felt was a really important thing to do, not just for my own education. It's very educational, and you learn a lot when you build your own model, but also it's really valuable to have a model that you trust and that you have a lot of experience with. So at this point, we've underwritten well over 1,000 deals with our underwriting model, and we've made tweaks over time, which allow us to underwrite more efficiently, more accurately, which is really important because obviously we have a finite amount of time, and we need to use our time effectively to find the best deals in our market. So as far as our underwriting process, we take a pretty detailed approach. We don't really do a back of the napkin underwriting and then go into more depth. If we like a deal and it passes our initial screening, we'll do a full underwriting on it and really put all the data together. And that actually, you can see in our quarterly webinars that we do with the public, share with the public. With our quarterly deal flow webinars, we have a spreadsheet that has the data for every single deal we underwrote that quarter. And we have the NOI, the cap rate, the CapEx budget, yield on cost, and all sorts of things that gives us really strong insight into our deal flow. And I think that's something unique about us, and our competitive advantage is that we're very focused and that our deal flow is only in Dallas and Houston. So we have this curated data set that's proprietary based on all the deals that we're looking at. So it gives us that advantage that we at least in our eyes, we see the market very clearly, and we feel like we have a very strong finger on the pulse.
Yeah, I love that you share that with. It's not something that you hold close to the chest. You're sharing it with the public, anybody that wants to hop on or has access to the links, which is really kind of unique. That, I mean, you might be underwriting, call it 100 deals in a quarter, so you see trends as they're occurring, not 60 or 90 days when the brokers are reporting back to the trends that they're seeing on their end. So I think that's something where, Lone Star, you guys can see a shift in the market and make a change in strategy and then offer the benefits to your investors before most people even know that that's happening in the market space. So that's super, super valuable. So I'm curious, you guys have the majority of your assets in and around Houston. I did get to partner with you guys, I believe, on your first Dallas deal. So what was really behind the choice of taking a look at a new market? You guys have clearly created a great footprint in Houston, but I see a lot of players moving in the Dallas market. So talk about that if you can.
Yeah, Dallas is one of the top markets in the country.
Mhm.
So you can't go wrong being in Dallas. We have done very well in Houston, but Houston is a bit of a polarizing market where some investors love it, some investors don't want to invest there. And we want to have a little bit more diversification in our strategy so we can attract more investors or provide different offerings to investors so that they can diversify within their investments with us. For example, we have some large investors who have invested quite a lot with us in Houston, and they feel like they've allocated enough capital to Houston. They don't want to over allocate. So that sort of precludes them from investing more with us. And obviously, we want to grow our portfolio, and we think that a strategic move to Dallas will allow us to do that. So it's always finding a tough balance between wanting to expand into new markets while retaining focus and expertise. Because if we expanded into 10 new markets, we wouldn't have any expertise, relationships, competitive advantage, and we probably would do less deals while being in more markets, right? Whereas if we stick with Dallas and Houston, I think we can actually be most effective. So we didn't take this expansion lightly. It's something that we've wanted to do for a long time, and we're not going to expand into a new market willy nilly. It's a concerted effort, and we plan to remain very focused.
So, so I'm interested then, like you have the one asset there now. I would imagine just simply from scalability and just kind of a strategy to have more resources in one spot, you probably will want to grow there pretty quickly this year. Do you have targets for this year on number of assets within the next 12 months, or what's kind of the goals there?
Yeah, that's exactly right. In order, since we are vertically integrated, which means that we manage our properties in house, uh, it's very helpful to have the requisite scale to support a staff and an infrastructure to manage the portfolio, right? So, uh, in Dallas, our goal for the year is to acquire 100 million worth of assets, which will provide us enough scale to hire a dedicated regional manager and begin to scale that infrastructure similar to what we've scaled up in Houston.
Okay. Yeah. So, and I didn't realize it. First time, actually, the second time I've ever been to Houston in my entire life was 2 weeks ago when I went out and met your property management team and construction management team. And Dallas is like 4 hours away. So it's not like somebody's going to make a quick run from Houston up to Dallas to go deliver some keys or something. So it's important to have the resources and the feet on the street up there as you continue to grow that. So yeah, very good. Now, you did talk a little bit about fully integrated, and for you said kind of a high level, it means you have it in house. But can you talk to some of the benefits and like as a group that's growing as fast as you guys are growing, um, like to think about bringing property management in house? That was probably not an easy decision or something you did very quickly. Can you talk about that a little bit and some of the benefits?
Yeah. My business partner and I, we had the goal to vertically integrate for I'd say at least 2 years before we actually made the transition. So we took a very methodical approach, and we took it slow, and we made sure that all the pieces were in place before making the transition, so that the transition would be as smooth as possible. And that's pretty much exactly what happened. All things considered, property management's a messy business no matter how you slice it, but the transition was very smooth. Our properties didn't miss a beat. Our accounting didn't miss a beat because we retained a lot of the same. I mean, we kept the same accounting firm on the back office. We kept the same personnel for the most part on site and corporate. So we tried to minimize the amount of turnover and transition needed when we actually brought property management in house. So transition was very smooth. The reason why we wanted to do it in the first place was because we wanted to have more control and transparency over the property operations as well as the personnel. The property management business is a people business, and the
Mm-hmm.
people are everything, down from the leasing agents, maintenance, managers, regional managers, and beyond. So we felt that if we wanted to, we want to build this business the right way, and that would require us to really have control all the way down the chain of the operations. And you mentioned growing quickly. I think in a way, having operations in house prevents us from scaling too fast, because if we were to hire third party managers, we could just theoretically buy as many deals as we want, and we just kind of throw third party assignments at the deals and keep it moving.
Yep.
But when we're actually responsible for the day-to-day and the staffing, hiring and firing, and making sure that, with every property we add to the portfolio, we have to evaluate our personnel situation and say, okay, well, do we need to hire more people? So it's kind of like a natural, not barrier, but a natural way to make sure that we don't get over our skis.
Governor, definitely, yeah, I think that's a really good point. And I personally try to invest in operators that are vertically integrated. I've had too many situations where I hear operators blaming the third party property management. And ultimately, at the end of the day, as an investor, I'm trusting you with my dollars. I don't want to hear excuses about your third party selection. I want to hear how you're going to get it fixed, quite frankly. And, it was really refreshing. I spent a little bit of time with Aaron out there at a couple of your properties a couple of weeks ago. And I paid particular attention to the employees that I met. And being a guy who's hired a ton of people throughout my sales management years for years and years and years, I think you can tell a lot about organizations by the people that work for them. And it was so refreshing to see smiling faces, very, very polite people, caring, giving, let me help you with this, let me point you in the right direction. So clearly it's a reflection of not only the work that Aaron's doing, but the work you guys are doing with Aaron as well, because that is a really, really hard business. And to have a smiling face when a new tenant walks in the door is probably one of the most important things that you gotta be looking at. So great job with those guys. Now, you did mention, and you've made reference to this other partner a few different times. I haven't met Ken personally, but can you tell the audience a little bit about this other guy that's in the mix and kind of what his superpower is, what he brings to the table?
Yeah. So, like I mentioned previously, Kent and I, we came together to form Lone Star. So we're 50-50 partners, and he brings an extremely complementary skill set to the table. So he, as you can tell, he does not like to be front and center. He's
Yeah.
very okay with being out of the limelight. He's NYU law grad, formerly a tax attorney at MetLife, senior tax counsel, and he brings more of an operational mind, dotting I's, crossing T's element to our business, and he makes sure all the trains run on time. And obviously he oversees everything legal wise that's happening at the firm.
Yeah.
So that is, so as far as what his superpower is, I would say and we talked about this at dinner, I think last week, he just makes sure that we're not missing everything, because I can be high level. I can kind of put deals together or find partners and have a vision, but he really actually is on the ground making things happen, especially with some of the unique things we do from a legal perspective, such as structuring 1031 exchanges in our deals and for our investors. There's a lot of different legal elements involved in our business, and most recently, Kent really has pioneered for us a new partnership tax exemption strategy that we're doing, which is a really, really interesting strategy, allowing us to pull off very exciting deals. So that would just never have been possible without the legal acumen and the relationships and, frankly, the tenacity that he's brought to the table as far as seeking out opportunity.
Yeah. Yeah. And I think, and I don't know if you want to get into it too much here, but you guys just presented, or you're about to present to your investor community, an amazing new project that you guys, through a lot of work and effort from Kent and the people around him, have been able to orchestrate, that really puts you in a position to take advantage of some unique opportunities that could be coming up in the near future in the markets that you're working in. Can you share even a high level, or is it too early to share what's going on there?
Yeah, I'm obviously limited as to what I can share, but kind of just building up on what you and I just spoke about.
Yeah.
We are currently focused on affordable housing strategies, where we are partnering with local housing authorities in Texas to restrict our units to cater towards households that make less than the area median income. So we're furthering the housing authorities and the country's mission of providing affordable housing, because we do frankly have a major crisis there.
Mm-hmm.
So it's a really great strategy, win-win for all parties, and not to mention our investors, like you said, who will be able to participate in these really exciting deals.
Yeah, and from an investor standpoint, we saw, or we will see, like some very significant increases in net operating income due to those efforts on a handful of deals and potential future deals as well. So, to the investor community, it's a not that we're advertising any specific opportunities at this point, but to see net operating income increase at the level that some of these deals are is just, it's a game changer in my experience. So,
Especially at
yeah.
a time right now where the future is uncertain and rent growth may be slowing, and the opportunity to implement value add plans may become more difficult. So
Yeah.
when you look at it through that lens and view it as a defensive strategy while still being able to increase income, it's really, really attractive.
Well, and I think that's kind of the perfect transition over to what I wanted to talk about next is what's going on in this crazy multifamily apartment investing space. We've seen interest rates go up. Everybody's got an opinion about what's going to happen, next month with the new interest rate hikes potentially. Where do you see the market today, and what kind of trends are you expecting to see continue?
Yeah, today we find ourselves in a pretty tricky market where transaction volumes way down because, as you said, interest rates have gone up a lot, and that is affecting buyers' underwriting. Meanwhile, sellers are still kind of clinging to what they thought their property was worth 6, 12 months ago. And that disconnect is really preventing buyers and sellers from transacting. So we are finding it more of a difficult market to find opportunities in. And, we're not unique in that regard. But I think over the next year, this gap will close itself through a combination of lowering interest rates as well as lowered seller expectations. So that gap will close and there will be some opportunity. On the other hand, or conversely, some people believe that there's going to be a big recession and there's going to be distress opportunities and fire sales. And I personally just don't really see that being the case. I think there's a lot of demand on the capital side, in particular for multifamily. And just to outline a few reasons why. Number one, multifamily is one of the most stable asset classes in real estate, and real estate generally is more stable than a lot of other asset classes. And then when you zoom in inside of real estate, especially through the COVID experience, we've seen a consolidation of capital into multifamily and industrial, right? Capital rotated out of office and hospitality, and it's already been rotating out of retail. So all of this capital that wants to be allocated into real estate is now really focusing on multi and industrial. So with that being said, with this massive capital inflow, it's really going to be tough to see a world where prices come down dramatically and there's these huge discount buys, because at the end of the day, there's a lot of people on the sidelines ready to jump into the market with their piles of cash, and that's going to keep asset prices high. So I do think there's going to be good buying opportunities, but I don't think we're going to see the buys of a lifetime like we did coming out of the great financial crisis in 2009, 10, 11, 12.
Okay, great. Thank you for kind of walking through that. It's the first question that's top of mind for investors, like, is now a good time to invest in this space? I'm a firm believer that the fundamentals in this space are still very, very solid. It's where I'm putting my dollars and my family's dollars and encouraging everybody I know to put their dollars. So, yeah, thank you for walking through that. Now, I'd be doing a disservice to the audience if I didn't give you an opportunity to at least talk through your most recent book that you just launched that talks about deal structure and some other things like that. So can you share very quickly a little bit about that and what you're doing in that space?
Yeah, absolutely. So just published my second book called Structuring and Raising Debt and Equity for Real Estate. I've got my copy down there. So it seems like you've got your copy nearby.
Yeah, mine here. Yep.
Yep. Really cool. So this book has been super exciting to publish, because the first book that we published was The Definitive Guide to Underwriting Multifamily Acquisitions. So much more niche topic, right? It was just focused on multifamily underwriting. And it, like you said earlier in the show, it really helped build credibility and build a name for myself and Lone Star in the space. But with a bit more experience in the business as well as in being an author. We published the second book kind of the right way. Dasha helped a lot with the new book, and
Okay.
We're selling at twice the pace. We're
Okay.
we're doing amazing. It's been a fantastic launch. We're all super proud. I was really nervous about the new book, frankly, because I
Sure.
thought that I had lightning in a bottle with the first one, and that
Sure.
I don't know if I was going to be able to replicate that. So it's been exciting to see the growth, and just as the first book has brought new relationships to us, the second book is doing the same thing. We're able to grow our network, meet new potential partners, meet new investors, have that credibility. So that's kind of a lot about writing the book and the benefits to us. But what's actually in the book is a really straightforward guide on both the debt and the equity side of the capital structure, and not just the nuts and bolts of the structure, but also how to go out and raise that capital and how to interact with lenders. And I spend a good deal of time towards the end of the book talking about investor relationships, whether it be with retail LPs, co-GP partners, fund of funds, and institutional capital, which we have continued to push and grow in that space. So one thing that makes us unique is our diversity of investors. We don't just stick to one type of investor or have one major investor. We really pride ourselves on working with a lot of different types of investors, big and small.
Yeah, no, that's fantastic. I was, you mentioned we had dinner the other night, and I was listening to you and Craig talk about, the $50,000 investor and the $5 million investor, and I was shocked to hear like how much emphasis you put on both. And of course, the $5 million investor has to get more attention, but the attention and energy that you put to the $50,000 investor has just been amazing in my experience. So Dasha, I'm curious. I didn't, not to put you on the spot, but should we expect to see a new published book with you as the author in the near future, or
Maybe a co-authoring.
maybe a co-authoring? Okay, very good. Well, investor relations, the Beardsley Way, could be a catchy new title.
It's a great idea.
Yeah. All right. Well, very good. Well, we are like, we go through these 30-minute periods very, very quickly, but you guys have brought just a ton of value here today, and I really appreciate you guys being on the show. I do have a couple of questions I'd like to ask everybody before we wrap up. So maybe we'll, Rob, first to you. Is there one specific educational resource that you might suggest for the new passive investor?
For the new passive investor, you have to find the right balance, because you don't want to dive into something too complicated or something that's going to make you overwhelmed and say, well, this stuff is confusing and for the experts, so I'll pass. So I think it really depends a little bit on who the passive investor is, because we have some passive investors who are new, but they're quite sophisticated, just not necessarily in real estate. And so some of those types of people have really enjoyed reading my first book, which is all about understanding the numbers driving the returns. And someone who's analytically minded like myself, approaching this business may want to understand how the numbers actually work. Where are the returns coming from? Sure, I'm getting monthly cash flow, but how does this all work as from a revenue, expense, debt perspective, right? So that's a great one. But for some people, that's a little bit challenging, and focusing on something more introductory maybe more beneficial, which there's, to be honest, a lot more of that sort of material out there than kind of the more high level in the weeds type stuff.
Sure. Okay. And Dasha, any specific educational resources that you might suggest to the newer passive investor?
I mean, we have our passive investor guide, which I think is actually, has a really good balance of being very digestible. It's quick, it's free, it's on our website. So yeah, I would definitely recommend checking that out. As I've read it, I I really enjoyed it, and I thought would be a great resource for a new investor.
Okay. And then kind of a fun question. Is there a recent, and Dasha, maybe you go first on this one. Is there a recent bucket list item you've checked off the list, or one you hope to in the near future?
I hope to go to Bali this summer. I've been wanting to go for a long time, even before the pandemic, but they closed down pretty hard. So I'm really hoping to do that this summer and possibly do some yoga retreat.
Oh, very good. Yeah, actually, I know a bunch of people that are going to Costa Rica for yoga retreats lately. That's what I keep hearing about. So interesting. Rob, same question.
Yeah, well, this doesn't sound quite as ambitious, but I'm glad to actually today we signed up for a conference in Nashville, and Nashville has been on my bucket list because I've never been, and I feel like I owe it to myself to go out and see the real estate out there and just see one of the major cities in the country that has been a real big growth market over the last 10 years or so.
Yeah, everything from Bali to Nashville. That's fantastic. So very good. And then I guess lastly, for either of you guys, like what's the future hold for Lone Star? Where are you guys headed next?
Well, Dasha alluded to Lone Star getting involved in development earlier, so that's something that is on our horizon. It's probably still very nascent and a year or two away, but development I think is going to be a fabulous strategy for us to implement and give us a little more diversification, still staying within multifamily and in our markets, but a different way to approach deals, so that way we have just more tools in our tool belt. So yeah, really excited about getting involved in development.
Outstanding. Well, very good, guys. Well, thank you so much. I appreciate this. Is the first time we've had dual guests on here, so that's been a lot of fun. And you guys brought a ton of value today. And to the passive investor who's listening to the show, when we talk about finding operators that are good stewards of your dollars, this is clearly a group that takes great pride, puts a ton of energy, and they're certainly experts in this multifamily value add space today. I'm sure we're going to see them doing the same quality of work in the development space in the coming years, but a really, really good choice to place your capitals. Rob and Dasha and the team will be great stewards of your capital. So Rob and Dasha, thanks so much for being on the show. I really appreciate it.
Yeah, really appreciate you having us on.
Thank you.
All right. And to the audience, as always, I encourage you to continue to get educated, get inspired in the space, take the action of investing in your first passive investment deal. I'm so confident that once you do, you'll continue to put more and more and ultimately become work optional or be able to quit the W-2 and decrease your dependence on the stock market and W-2. So thanks for listening today. And until our next time, thank you.